All right, hello everyone. The second part of the Zoom, live Zoom right now. Let me take a look. I'm looking at my phone. Going over some pairs. All right, we were looking at ducks, so we'll keep you updated on this one. I would love to see this get respected right here. This breaker, possibly this small fair value gap, and then a continuation higher. Ideally, another retracement, and this is where my entry would have been. Now, this is, in my opinion, a little bit forced because I don't like the daily. I don't like the 4 hour right now. And again, the dollar is, as of now, we had a big update yesterday. So buying right here doesn't really make sense to me. And I feel like this buy would have been very forced. I don't like it. And I yesterday said, ideally, if we did come into this 4 hour fair value gap right here, then it would have been a way different story because that's also something I planned ahead of the day. So yesterday I was sort of demanding price to come in here in this 4 hour fair value gap and then look at the 5 minutes to get my entry on. But that didn't happen. We continued higher. We have all this liquidity. While that's pretty irrelevant to me on the 4 hour, etc., because I don't monitor price on the 15 minute. But again, it's just not something I like. And we are very high. We just had this ST. We are very high up. So what's the basis of everything? We buy in discount and we sell in premium. Right now, I feel like personally we are buying in discount or buying in premium. Sorry, not buying in discount. Right here, this high up in the leg, I feel like we are buying all the way up in premium. And that's not something I like. If this exact situation right here was located right here, it would have been a way different story. Why? Because then we had a different context. We were still coming off of the monthly order block right here, and we still had momentum, and we had the potential to reach higher. Because we still had this clear draw on liquidity, it's a way different story. Now, right here, we are already above this intermediate term high. We could expect a bigger retracement, like I said in the beginning of the week, to potentially here and then continue higher if it does want to continue higher. Now, and then for me to buy in premium right here after we reached our initial draw on liquidity, it's a bit, I don't know. I don't like it at all. I don't like it. So again, for me, I don't like this. Again, if this situation, exact situation was here, for example, this little retracement into this fair value gap, that's not buying in premium for me because we still had some equal highs here to clear out. Now, right here, we are just waiting. And if we do get, and that's just another confluence, don't get too caught up on it. If we do get a volume imbalance now to the downside, we have an exhaustion gap. That exhaustion gap, like the name of it, exhaustion gap, is the price is exhausted to go higher, so we will likely have some sort of retracement. So that's basically it. And for the rest, I don't really like it again. I don't like this price action here. If this was lower, located lower, then it would have been fine for me. Then I would look for buys. And if the dollar was more clear, then I would have also been looking for buys for sure. All right, let me look at some other stuff as well. The bonds as well, just aiming for these lows like we talked about. And I think right now it's pretty clear that it's just aiming for the lows. Probably aiming for this fair value gap right here. So if it's doing that, then dollar might be going higher, but again, calling that bottom on the dollar right here is difficult, especially without an MSS, without any ST right now. Now this ST could be in the making on the daily. So if this day today will be a consolidation, we will close, we will probably have a sweep of the previous day low into this ST and then maybe a continuation higher. That would be nice. That would be nice. But again, that's me forcing something and forcing a bottom in the market while we've been bearish all along. And it's not something I like to do. All right. So bonds as well continuing lower right here. Bonds we could see come into 4-hour fair value gap. Oh, come into some sort of 4-hour fair value gap that's probably overlapping with something like this. So for bonds to come into here and then drop lower, that would be ideal for me. Yes. ES is not that, let me go with Forex first because ES is not really a London pair. So let me do EU and GU first. All right. Well, this is pretty clear. I haven't done a weekly analysis on this, so I might not be the most accurate on this pair, but let me take a look. If I look at this, all I'm thinking right now is basically, of course, it's inversely correlated with the dollar. So I'm thinking basically the same as the dollar. If it does want to continue higher right here, I want to see this order block right now hold. Now, this is a bit different from dollar because this is rejecting right now off of the order block. So that is a bit different. But again, if we do want to continue higher, I want to see this order block hold, and ideally the mean threshold right here get respected on a closing basis. So if we do close below on a daily, with a daily candle, if we close below right here, then I would expect lower prices and maybe a deeper retracement, or then we could aim for these equal lows right here. And that's basically it. Now, if we do take a look at this daily order block, there might be an entry in here. Now, this is something I don't like. I've gone over this in execution reviews as well. I just don't like the fact when price comes into my daily or 4-hour order block at a time like this. Now, this is a London close, so it's not too bad, but I just don't like it. Now, this is an ST right here. This would be my ST. This SIBI, this BISI. Then this would have been an ST entry, very early entry. I personally don't like that entry. Now, as soon as we have a displacement away again, we have a displacement away again here. Now, this is obviously 4 p.m. So that's not a time to enter for me. We wait. This again is Asia, not a time to enter for me. Now here, this would have been my entry if it was in London, but again, it's not London. Here we are respecting discount rates. Here we have a new displacement. Now we have this fair value gap right here. We are sort of coming into, no, not yet. And again, if we ask the same question on this time frame as we did on the higher time frame, if we do want to continue higher, and we have some 2 a.m. volatility right now coming in, as well as on DAX, I believe. DAX is just completely disrespecting this breaker as of now, but again, we'll just wait and see. 2 a.m. volatility coming in. If we do want to continue higher, I would want to see it continue higher from here and potentially come into this lower order block as well and then continue higher. Now, I've heard a lot of stories about Forex where it just doesn't tag you in and just continues higher. I think this might be one of them. Maybe GU tagged us in if GU had the exact same price action. But again, for EU right now, I would expect higher prices just based off of this. And my first target right here would be this. Now, and then I would ideally want an overlapping something. So let me go up a time frame just to have something more clear. This 4-hour order block, that would be my first target. Just the low hanging fruit. And it's not even that low hanging, it's pretty high. So if we did get tagged in, I would look at something like this right here. All right, so let's take a look at GU as well. GU is not that clean. GU is also, if I take a look at this, is the weaker pair of the two. Why is this? Because GU is coming very low. Now, if we compare this swing low to EU, so this is the 10th of April, and the 10th of April, the exact same swing low is here. See how EU is all the way up here, and GU is almost taking this swing low out. Now, GU is the weaker pair in this case. So this is also something to take into account. If you are trading Forex, you might want to switch between pairs. Now, I've always emphasized on the fact, trade one pair, one execution pair. That's true, but for Forex, it is a little bit different, in my opinion, because Forex is easily switchable. You can switch very easy between Forex pairs because nothing really changes. The only dangerous thing, and the thing I don't want to see people doing, or of course, if you want to do it, go ahead and do it. But what I don't recommend is switching between indices and Forex, because then you get a lot of different characteristics. Now, between the Forex pairs, there will still be a little bit different characteristics, but it will not be as significant as between indices and Forex. Then you're just basically trading two whole different markets, and that's not something you want to do. So if you do want to look at more pairs and you feel like you're ready for it, it's also a different story. If you feel like you're ready for it, then you could maybe take an extra Forex pair if you are trading Forex, and then execute on that. Same for indices. If you are trading indices and you feel like you're ready for it and you want another pair, and wanting this other pair is not because you feel like you'll make more money. No, it's just to diversify your risk. And the reasoning behind switching us, or the reasoning behind looking at another pair, has to be legit. It has to be a legit reasoning, not just a reasoning or a subconscious reasoning as to, I think I'm going to make more money right now because I'm using another pair. No, that's not the right reasoning. The reasoning should be, I'm looking at this other pair because maybe I can get a high probability and I can do a relative strength analysis on it. All right, so right here, personally, I don't like rejection blocks right like this. So I don't really take them. I don't really take trades off of it. I just don't like them. I don't know. They're just everywhere or something. I don't like rejection blocks. Again, same story here in London close. We came into it. We had some sort of ST right here. We respect the ST. Displays away. Now this right here gets respected. We have another displacement away. Now, if something like this happened in London, that would have been so clean. Just this displacement away from this respect of the ST. Let me put it that way. This displacement away. If something like this happened in London, ooh, that would have been very clean. Now, this also wouldn't have tagged us in, I believe. No. You might see a lot of Twitter, a lot of people on Twitter say the exact same, that they didn't get tagged in here. I would be curious to see. All right, this would be my target, my low-hanging fruit. So if we did get tagged in here, then I would target something like this. Now, since this is 6R, I would possibly already take everything off at 3R, because 3R is more than enough, and I would maybe even target this order block right here and not aim for the moon. So definitely, if you do start to trade, etc., have some sort of fixed target as well. If it's too far away for me, like here, it's 6R, then I like to just aim for 3R and take my profits and just go home, essentially. Just get in, get out. Now, the thing is, because we are now exploding up at 2 a.m., I've talked about this on DAX as well. If we are exploding up at 2 a.m. and I'm not sure how it is for Forex because I don't look at Forex trading during London, but it might be the same. Because we are now exploding up at 2 a.m., we could also see some sort of reversal later on in London. So because we didn't really get any protraction, we didn't get a clear Judas swing to the downside, we could potentially see it come higher here where it explodes in at 2 a.m. or 3 a.m. and then see some sort of reversal to continue lower. So that's something to take into account as well. We have this order block right here. We have this fair value gap right here. And let's see how that plays out. We do have this fair value gap still here, but for it to come all the way back now in the next candle and then come to this fair value gap and then continue higher again, especially after a huge candle like this, that's a low probability in my opinion. Again, same for EU right here. Did we come into this order block right here? We didn't. All right. Then it's just a matter of seeing if we respect this order block right here and either continue higher off of here or continue lower. All right. Yes, same for GU, USD cut, daily. Don't take my analysis for the holy grail, by the way. I'm doing these Forex analysis really quick on a daily. I haven't studied them properly, so don't take trades as well because I'm saying something. Please don't. You'll probably lose if I do say something and you take a trade, especially since I don't trade Forex. So don't take a trade just because I say it looks good. All right, daily, we're coming into this fair value gap. This is pretty clean actually, but again, not financial advice. Don't take any trades, please. We are now rejecting off of this SIBI right here. So this day could potentially head towards the previous day low at least, and then potentially, of course, this low and potentially these lows. USD cut has been bearish for a while right now. Again, also depends on the dollar. We don't have a clear view on the dollar, so I'm just basing everything right now off of the Forex pair. And if we do drop down right here, all right, as well overlapping. Now this is very clean. This is exactly what I talked about on the dollar. Actually, what I wanted to see, if the dollar wants to continue lower, I would have loved to see a close below this low. And this is exactly what I mean. I want to see a close below this low, then have some sort of fair value gap like we had here on the 4-hour, and then retracing into that and then continue lower. Now, of course, it didn't close below, so that whole idea is invalidated right now. And this is exactly what I mean. When you close below right here, price only essentially needs to return into this fair value gap, and this is your mitigation block. And then we can continue lower. So if it does want to continue lower, I would love to see it continue lower from right here. Now, let's see if we could have capitalized on it. Now, because this is a clear order flow thingy on the daily, I will look at a 15-minute entry model and not at a 4-hour. Because at a 4-hour, of course, it's also there, but I just like the 15-minute and I like the daily fair value gap right here. So my main idea would have been on the 15-minute. Let me take a look at this. Not the clearest ST that I can see. We have the only busy that we have is all the way down here. Not something I like. But then again, if the ID is right, etc., ST doesn't have to be picture perfect, like I talked about in a previous video as well. All right, then we're displacing lower right here, mark structure shift, etc. We are respecting order flow right here. As you can see, this fair value gap is getting respected. So we are respecting order flow. Then right here, again, we are displacing away, respecting order flow. Here at the start of London, 1 a.m., respecting order flow. Now we are currently right here. Now, if we could get, oh, that's not what I meant to do. if we can get a retracement into right here and see how this is the exact same scenario just on the 15-minute that we just had on the 4-hour. See this? And then on the 15-minute. Exact same thing, just fractal. Now, again, then we expect the same thing. Because we are coming off of the daily SIBI right here, I would expect some sort of lower prices, possibly aim for the previous day low. And I would expect lower prices from right here. So coming into this fair value gap, we also have this fair value gap right here. But again, I do like to see a fair value gap that's overlapping with another premium array. So then it makes it stronger, in my opinion. That doesn't go on to say that it can't leave when it comes into this fair value gap. It could potentially just come into this fair value gap if it does become a fair value gap, and we will know in 1 minute. And it could just drop lower. But again, I like to take this one. So if I would have taken an entry, it would have more than likely been something like this. And target previous day low. Again, don't take the entry, you will probably lose. Because I don't trade Forex mainly, so I'm not that accurate on the entries in Forex, and I don't know the characteristics that well. So again, don't take the entry. AUD USD. Oof. Well, this is a consolidation. It's very ugly, but we are coming into this daily fair value gap. And same thing as we saw on USD CAD. We are rejecting away on the previous day. So Monday rejected away. Tuesday is expanding higher, which is pretty clean actually. The consolidation is not that clean, but this price action is pretty clean. Now, again, sweeping these equal lows right here into this daily fair value gap is all irrelevant to me. It doesn't really matter. If we had these equal lows or not, it doesn't matter. And again, this could be a fake bottom, this could be anything, but this is a fake bottom actually. But again, that's all irrelevant because the only thing I'm looking at here is my entry pattern, and that's an ST. ST get respected, then we have order flow confirmation, and then I enter on the next discounted premium rate. That's it. So we see this ST right here, overlapping, pretty clean ST. Now I want to see this ST get respected. So this breaker, hopefully, yes, exactly. We don't come below the mean threshold of the breaker, so we respect the breaker as well as this order block, of course. It's nested inside this breaker. We displace away again. Now this would have been a really clean London entry again if it wasn't for the Asian session. Now the next thing, we are displacing higher. We are pretty high right now. Now again, I would want to see price come back to this fair value gap for me to enter. This would be too high, and it would be well, maybe not too high, but there's not something overlapping like I talked about. And this order block with this fair value gap is just, I just like that more. And as well in a short-term range, exactly, this one is in discount. So if I were to enter, I would probably wait for it to retrace potentially in here. My stop loss under this swing low. And then for my target, this pops out to my eye immediately. This huge fair value gap. This could likely be a target if you want a quick scalp. Next target for me would be above these highs. Above these highs. Again, I don't want to repeat myself, but don't enter. Please don't enter. You will probably lose, and I will probably be very wrong because I don't trade Forex. All right, USD JPY. Let me take a quick look at DAX as well. Ooh, rejecting now, but it is respecting, to be fair, it is respecting this breaker right here. But if I saw this, I would need another displacement right now, like this. And then if this displacement was clean and it would just satisfy my demands of price action, especially in a difficult price action that it is currently, then I would say, all right, I would enter. But again, this is not that clean for me. I would want another displacement right now. So possibly 3 a.m. We will wait for 3 a.m. because that's when we will get another volatility spike, and that's interesting to see. All right, we are kind of displacing right now. I would want a true displacement, so not a wick above this or not a wick above this, a true body close above it. That's what I would want to see. By the way, I'm just going to take one last look at the dollar. As you may have known by now, I don't look at the dollar whilst I'm trading. So I get my ID ahead of London session on the dollar, and then I don't look at it again. So the ID was this 4 hour for value gap, etc., etc. Now I'm not scouting the 15-minute on the dollar. I don't do this because, again, if you don't focus on one pair or don't focus on your execution pairs and you will start looking at the dollar, you will probably start to compare them at every move that the dollar is doing. So you will see an up move right here and you're scouting on DEX, oh, it should go lower, it should go lower. And then you see an up move here and you're just confusing the absolute shit out of yourself. And you'll probably stay out of trades as well that you normally would have taken because the dollar is not agreeing, etc. And this is something to be aware of. This is something I've done multiple times in the past as well, where I just was scouting the dollar and it was absolutely detrimental to my trading. It was not beneficial at all. And not necessarily looking at the dollar on the 4 hour, I was always looking at the 15-minute or 5-minute or even 1 minute for my entry model. And it wasn't even in my trading plan, and I would just not be good for my trading. Now, so I do only take a look at the dollar off of a high time frame basis. The lowest I go is a 1 hour. And that's just to get a sort of better view, but I treat it as my higher time frame still. So just to get a more refined view, but I don't go lower as that, and I still treat it as a higher time frame. All right, I think you get an idea. Not displacing currently, but we still have 9 more minutes until the body close, so not too worried. 5 minutes is not that clean as well. All right, let's continue. We were at USD JPY. USD JPY. All right. This is not too bad actually. We're coming into this 4 hour for value gap, but again, this is the same case. Now I don't have a clear drawn liquidity right now because I just don't trade Forex, so I'm not sure where it's at, where it's heading. I can see this weekly fair value gap. I can see this daily fair value gap. So we might be heading to that. I'm not sure. Again, if we do close on daily, we could see a previous day low sweep and then continuation higher. 4 hour right here, I would expect higher prices right here. It is respecting this fair value gap right here. So that's something nice. Now, if I do drop down lower, yes, this is already what I expected. Because on the 4 hour, we can see we come into this fair value gap, we have this huge wick on the next candle. This on the lower time frame is we come into this fair value gap, we have our huge wick, and on the lower time frame is just a price leg up and then a price leg down. Now, essentially saying we have already reached that draw on liquidity right here. So for me to enter again, that's not something I like to do. So I would not enter this, even though we get this displacement right here again from this order block. I would not enter here just because we already took out this draw liquidity. Now, if we were here, right here, if this would have happened in London, it would have been perfectly fine. And then I would have still entered. Actually, all the clean moves happened in Asia. I'm not sure what's What's going on? Why did all the clean moves happen in Asia? It's unfortunate, but it is what it is. We might have to start trading Asia. No. I'm joking. That's how you get in the endless cycle of looking at different sessions, looking at different systems, etc. Yeah, the clean move happened here. It took out drawn liquidity. I wouldn't enter here. So even though something happened here, this would not be an entry for me. No. I would probably, and that's just me speculating, I would probably see these lows go and then continue lower for a lower time frame or a lower discount array right here. Potentially this order block, and potentially even this breaker, but that would have to be on the daily, which I like. Yes, exactly this order block right here. Potentially this. So I would wait for a new higher time frame discount or premium array and then just reevaluate and then just do the process all over again. All right, so again, nothing clear right here. We could, of course, go higher from here, but I'm not expecting it, and this would not be a trade I would take just based off of this. Not a trade I would take. GBP cut. All right. I'm seeing this huge volume imbalance, obviously. On the weekly. Ooh, we are just shy off of this weekly fair value gap. So I think we will definitely come into that. We do have this breaker. So what's the mean threshold of that? All right, we do have some room to move. So I would expect a movement into this weekly fair value gap just right now, really quick based off of that. And then the thing I would want to see us come into this volume imbalance, or potentially, if price is not that accurate, come into this SIBI and then continue lower. But I would prefer the volume imbalance right here and potentially overlapping with this breaker right here. That's my preference. Then let me take a look at it on a 15-minute. Obviously daily. Now I would want to see, this is actually, let me take a look at this. Yeah, this is part of the volume imbalance. All right. So this essentially is all the price action we're looking at, and this is basically all the daily volume imbalance. So we're not too worried about it. Obviously, we see fair value gap right here. Now I would want to see some sort of ST coming into this volume imbalance. And potentially this could be our ST to go lower. But again, that's nothing clear as of yet. I would have to wait still and wait for an ST, wait for that ST to get respected, and then take my entry. Now, this would likely not be a London entry. It would likely be a New York entry, because obviously the 15-minute candles do take some time to form, etc. So would it be a London entry? Not too sure. Now, if we can get an ST lower, boom, respect of the ST, and that would be my entry. This right here would be my entry. Now we might still continue higher a little bit, coming into this 15-minute fair value gap, but again, pretty irrelevant to us. Get an ST, respect the ST, then that would be my entry right here. So yeah, we would have to wait and see Bitcoin. I don't actually normally look at Bitcoin during London. Let me take a look. Ah, yes, we're coming into this daily fair value gap. I'm still expecting prices to continue higher to this monthly fair value gap. Can you already tell how easy this analysis was compared to Forex? Because I normally trade this pair. I normally trade, I don't often trade Bitcoin, but I do tend to look at it once in a while, or in the weekend when I have some time left over, I just take a look at Bitcoin. So you can already tell it's way easier for me to get to withdraw liquidity. The understanding is way easier to me, etc. Why? Because I've traded this pair before, and not, I wouldn't say I've mastered Bitcoin, definitely not, but it is way easier for me to navigate in the price action. Now this is pretty clean actually. We have a previous day low sweep, and we could see a continuation higher right now until here. I would ideally want today to fully close in this fair value gap. Why? Because as well, we have this right here. I would ideally want to see this day today closing fully this fair value gap. Why? Because that would indicate that we are definitely not going lower for now. Why? Because we are then disrespecting a premature premium array. So let me think about it. Yeah, we are disrespecting a premature premium array, and that would also indicate that there's not a fair value gap forming right here. So if there is a fair value gap forming right here, what could happen? We could have a previous day high sweep into a daily fair value gap and then maybe continue lower if it does want to continue lower. So if we disrespect this premium array and even prevent from it forming, then obviously I will expect higher prices. And ideally, it would be great if we then disrespect the mean threshold of this breaker right here and then close somewhere around here. That would be perfect. So for an entry, let me take a look. Oh, this is a very clean SD. Again, everything happened in Asia. All the clean price action happened in Asia. That's perfectly fine. We got an SD here. This is picture perfect SD. Don't need to talk about it. We had we didn't come into the breaker, the body, but we did come into the wick again. I would have taken the body, but I do see this as a respect of the ST because we have a small retracement into this breaker, not necessarily the body, but into the wick. I would see that as a respect of the breaker. I've talked about that as well in the review, I think, one of the reviews. Then we have another support area. Of course, these are all reclaimed order blocks, as you can probably tell. These are where central banks, because obviously if central banks offer opposing liquidity, central banks are already long right here because they have huge orders, etc. Just this is your support. That's it. Don't need to know the exact logic. The logic does help me to confirm anything, but don't need to know everything. I mean, all right, so we respect that. We displace away again. Now in London, this is not London yet, so I would have likely entered here if it was inside of London. Again, that's a hindsight, all hindsight, beautiful hindsight, can never get wrong. If we do create a new fair value gap, I would expect some sort of retracement into this fair value gap and then a continuation higher. Now, obviously, first target is here, but these highs look too good to be true as well, and they are trendline liquidity. And then the next target for me would be this, and of course this daily breaker right here. These are potential targets. Now again, if I was to enter, I don't like entering up this high. This is also the exact reason why I don't like it happening in Asia. If this happened in London, we would have gotten a picture perfect textbook entry. But now, because it happened in Asia, you have to enter very high up in London, and that's just, I don't like that. You're basically chasing price, not necessarily, but it feels for me like I'm chasing price right now. So that's not something I like to do. I either like to enter somewhere around here or just not enter at all and wait for a new opportunity. Is this overlapping with, yeah, exactly. So this fair value gap is overlapping with this breaker as well. So that's very clean. That's something I like to see. Again, this breaker right here, or sorry, this fair value gap that would be created, if it does get created, wouldn't be overlapping with anything. It's also not something I like to enter off of. All right, ES. ES is not a London pair. So, oh, ES is ugly. The same thing as on DEX, we have this volume imbalance. That's about it on the daily. I haven't traded ES in a while. 4 hour fair value gap as well. That's pretty clean that we reject away from it. Then on the 5 minute, these jittery candles. That's typical ES in London session. It's just not something I like. And it's also the reason why I went to DAX, because I want to trade London mainly, and I used to trade DAX as well, and I just switched to DAX, and I personally don't regret it. We have this ST, pretty clean ST, come into the wick right here, respect it. If we did retrace somewhere in here, that would have been my entry. We don't have another fair value gap right here. Personally, I could say this would be my entry, but if there's no fair value gap, I don't really like it. And this is not the cleanest. So for me, again, and this is all ahead of London. This is not even London itself. London starts here 2 AM. So no, probably wouldn't have been an entry for me. Now, if we do want to continue higher, I would want to see it continue higher right here, not there, here, off of this breaker right here. This is I do have to give ES that it is very accurate. It can be very accurate on a PD race. So this is something you'll see where it just reacts to the tick, to the exact tick, and then moves higher, or still has a retracement. But it does react to the tick to a discounted premium race. So that's something I do like about ES. We did reach the drawn liquidity right here, the short-term drawn liquidity. Then the next target for me would be this high. It's the only thing I can see in nearby price action. It is very high up. Because it's so very high up, I would also take the rejection block right here just to have a little bit of a lower hanging fruit. Then let me take the 1 hour because it's more clean. All right. Now, if you do want to continue higher, then I would want to see price respect this breaker right here. Now we can come a little bit lower because obviously this is the complete breaker. This is the total breaker. These 3 up candles right here. That's the big breaker, not a body close below the mean threshold right here. That's not something I would want to see. Now, if I were to enter, I would wait for a retracement possibly into here and cover the breaker. And then target the rejection block. That's what I would do. Again, don't enter, please. I'm most likely very wrong. Just keep that in mind. Nasdaq, well, basically, essentially, we're looking at the same thing. Just doesn't have a value gap. Doesn't have. We have this breaker that we came into. This breaker right here. Came into it again here, but again, this wouldn't have been an entry for me. So again, this is something to take into account, like we talked about earlier on in the Zoom. If you do want to look at multiple pairs, this will likely be a day where you get a cleaner entry on ES. And looking at this recent price action, ES has been stronger as well. So, and ES has a clear fair value gap, indicating displacement, indicating that it's stronger as well. Now that's something to take into account. And then you can say for yourself, ahead of London, ahead of New York, all right, I want to trade ES today and not NASDAQ. So then you might have gotten an entry in here or whatever. And you might have gotten an entry in here, and NASDAQ would have provided possibly the same entry, but it didn't come off of a 4-hour fair value gap or anything. So then the entry would have been cleaner on ES. Let me actually, what's it called? What's it called again? YM, yeah, that's it. The Dow. Let me get the contract. All right, the Dow. The Dow Jones, let me take a look. Daily, Again, very ugly coming into this SIBI right here, but that's not that relevant. We have this 4-hour fair value gap. That's the same one we saw on ES, but the Dow failed to come into the 4-hour fair value gap. Now that does indicate SMT between ES and the Dow. But so that's a nice confluence, nothing more. It's just a nice confluence. The entry here was pretty clean actually, but again, we're not coming off of a 4-hour fair value gap. At least, let me, what low? 3, 4, 1, 1. No, it's the exact, it's equal lows, exact equal lows. All right. So fortunate because this was a clean entry right here, especially on the 15-minute. It was a very clean entry right here. And then I would potentially, my entry would have been here, knowing that it can wick into this breaker right here, covering this breaker as well. Targeting high, expecting higher prices right now. So I would be expecting higher prices right now. We have this huge fair value gap. Let me see if there's a clear target on here somewhere. This rejection block, this 4-hour rejection block, and potentially new highs, but that's very high up for me to target. So potentially this could have been a trade. It's exactly 3R. Nice, perfect. So let's just take that. Yeah, all right. Oh, there's also a reason why I don't go into the lower time frame on the bonds, yields, and dollar. So the 3 that you see here, I'm not going into the lower time frame. You'll just confuse yourself with price action like this. All right. Yes, we are looking at a lot. I'm almost forgetting what we already looked at. We did look at everything right here except for Euro GBP, I believe. Yeah, except for Euro GBP. This is not a pair I would trade. This is not an execution pair for me. If I were to trade Forex, I would use this as an indication to trade Euro or GU. Why? If Euro GBP is going lower right here, that indicates that GBP is stronger. Now, if you were to trade 2 of these, then you can also take a look at this. We established that EU right now is stronger, so that would contradict the Euro GBP, but Euro GBP has been going higher previous days. So that indicates that Euro GBP is going higher. Euro is stronger than the GBP. So relative strength leader, the stronger pair is Euro right here, is EU. And of course, confirm that with the current price action on EU. So as you can see, yes, it is stronger. All right, cool. Good to know. As well, be mindful of this fair value gap right here on the daily that GU could come into if it does want to continue higher. And this is something, is exactly what I was talking about, where Forex, at least that's always what I see. I always see people trading Forex that don't get tagged in for some reason. Maybe it's my confirmation bias speaking, but yeah. Coming into this fair value gap or coming into this daily fair value gap, we could see a retracement or something. So take it into account. Like we said, 2 AM is expanding, 3 AM could be expanding, then we could see a reversal. Don't take my word for it, please. And don't trade on it. That's something I've noticed on DAX, so I don't even know if it applies to Forex, but I'm just assuming it might be similar. So yeah, just take that into account. DAX is not displacing higher. Unfortunate. So just looking at my phone right now, but so yeah, DAX is not displacing higher right now. The thing I could do, or the thing that most people would do in a situation like this, because they feel like they're missing out on something, they will probably start looking at other pairs and actually trade the other pairs. That's not something you want to do. Just stick to your own pair and stick to the pairs you're comfortable with. So I'm comfortable with DAX. And I'm not switching DAX because it has one bad day or one bad week even, or one bad month even. That's not something to do. Don't switch. Don't get into that endless cycle of just looking at new pairs. All right, it's the same kind of thing with a system, right? If you're constantly switching pairs, you're not mastering one pair. If you're constantly switching systems, you are not mastering one system. And this way, you're not actually learning. You're just not helping yourself if you're constantly switching between stuff. And you won't pick up any steam on your learning curve. You won't excel in your learning curve, like we've talked about. You will just be learning new things over and over and over again. It's just like reading a whole new manual over and over every day, and not sticking to one manual and knowing the manual inside and out. And that way you actually learn one great thing instead of learning 10 things where you barely know 10%. I would rather know 100% of this one thing than knowing 10% of 10 things. It's about the what's the saying again? Don't be scared of the guy that practiced 10,000 kicks one time. Be scared of the man who, or woman, of course. Be scared of the man or woman that practiced one kick 10,000 times. All right. So again, not displacing as of yet. We could see displacement at 3 a.m. So just waiting on that. What DAX does like to do is it sort of consolidates like this ahead of 3 a.m. So you'll see a nice little spike on 2 a.m. like this, but then like 15 minutes before 3 a.m. opening, it consolidates a little bit, and then 3 a.m. gives you the huge spike. Now, if that does happen, I do like to enter ahead of 3 a.m., but if it's right here, I wouldn't enter ahead of 3 a.m. because now 3 a.m. I know it brings in the most volatility because it's the actual London Open. 2 a.m. is Frankfurt, and 3 a.m. is the actual London Open. So I know this, and right here, if I would have been here, I wouldn't enter because it brings a lot of volatility and because it's sort of like a news event. It's sort of like a CPI or anything. Of course, not as crazy as CPI, but I think you get the idea. So I would want to see 3 a.m. the next candle displays higher and then potentially enter. Now the entry would likely be at around 4 a.m. or something. Again, not predicting, it's just telling you, not trying to predict that there's an entry at 4 a.m. I don't care that much. I just trade what I see. If you do take a look at the futures contract, you can see it's a little bit different. Now did we reach something inside the, no, okay, the futures contract is just as ugly right now as the CFD. So yeah, normally futures contract, obviously it closes at, what is it, at 4, and then it opens up again at Frankfurt Open. So you have a lot of price action that's not there. But again, CFD is not official price action. It's price action off of Pepperstone. So Pepperstone can determine this price action. So it's not a set in stone thing. And Forex is set in stone. Forex, you'll see the same price action everywhere. And this is not the case for CFDs. So that's why CFD and your broker that you enter on will likely be very different. And Forex, it will almost always be sort of like the same. Let me go over the pairs again. All right, ES is right now going higher. Nasdaq, we didn't have anything. Dow, expecting it to come into this rejection block right here. It's unfortunate that we missed this actually, but it's okay. DAX now displacing a higher. If it can displace above a high, that would be great. With 3 a.m. open, we don't trade this pair on the lower time frame. At least I don't. All right. So EU, like we did talk about, it's now respecting this right here. Not convincingly, but it is respecting this right here. So we'll have to give it that. Again, this might have been an entry for you, not too sure. We could reach still up into here, coming into this order block right now. Could see a slight reaction. GU, it's expanding higher. And it's unfortunate that both on EU and GU, well, obviously EU came into it right now, but GU didn't come into this fair value gap and then displaced higher. It is what it is. Still same thing. Notice how I set this fair value gap as well. We could displace lower. Now we are not displacing lower yet. So what you could potentially see is, and this is why I like to take an overlapping fair value gap with something, another premium ray overlapping, because this is also what you can see is when we come into this fair value gap, we don't actually displace away and we're just sort of consolidating around that fair value gap. Now we could see a little sting into here and then a drop lower. So that's something I would take a look at personally. So again, the entry would be in this fair value gap, covering this high, the bodies. That's fine, doesn't have to come that high for us to go lower. And then low hanging fruit, these equal lows, but like we talked about the previous day low. So let's keep an eye on that as well. Oh, AU didn't retrace, same situation as USD cut, and just went higher off of this fair value gap. Perfectly fine. Perfectly fine. USD JPY. Yeah, this is what we talked about where we didn't want to enter here. I would rather look for shorts right here than look for longs and target this low and target this order block. So target some fair value gap right here. I would not want to take longs in here. Definitely not. Even though a lot of people, and this is where a lot of people go wrong as well, or not necessarily go wrong, but what I used to do a lot is I used to look at this liquidity and think it needs to go higher. There's liquidity there. Why isn't it going higher? It needs to go higher right now. So I would force simple buys right here. This would have been a high that, or this would have been an entry that I would have forced back in the day, 100%. And then target this liquidity right here because there's liquidity. It needs to take out the liquidity, right? But yeah, that's just simply not true. First thing it needs to do, it needs to come into a new discount. It needs to give some order flow change, and then we could potentially target the liquidity. So just because there's liquidity doesn't mean we are actually heading for that liquidity. We could leave the liquidity until a later point and then target it. All right, GV cut, moving higher right now. Now, yes, this is what we talked about. If we do get an ST right here to the downside, then I would want to get involved. I would not want to look to buy here. Let me see, did we have a 4-hour? No, I would not want to look to buy here. And we have this weekly fair value gap that we're still most likely heading towards. So a 15-minute ST here would be awesome. Could potentially be a New York reversal as well if it does want to continue higher and reach up into this fair value gap. But again, then we would adjust everything in New York. All right. Yes, what's DAX doing? Come on, DAX, come on. Do something, wake up. Come on. It's also typical DAX. DAX, it is a great pair to trade, but when it's consolidating, it's consolidating for pretty much a long time. And what I do like about DAX, it's very visually consolidating. So it's not necessarily a search and destroy condition. It's very visually consolidating. So that's what I do like about docs. For here, for example, it's just failing to displace. Now, this is not necessarily consolidation. No. If we do continue to consolidate in here in London, then I would consider consolidation. But right now, it's just right now it's failing to displace, but I would need more price action to call this consolidation. I would still expect and still give price some time to displace higher. It could take another 2 candles, for example, and then see some sort of entry. Oh. So if we do create a displacement here, again, 3 AM open in 7 minutes, so we'll keep watching it. 3 AM open also has a little bit of a spike on ES, and on indices it's not that big of a spike as on DAX, but it is a little bit of a spike. So we could see some volatility coming in at 3 AM, and it could head for the targets. That would be pretty cool. EU just continuing higher. So there must be people out there that caught this move right here. Congrats if you did. 5 minutes was actually pretty clean. All right. GU continuing higher to the target right now. USD cut not displacing yet. If we do get a new displacement here, then I wouldn't necessarily expect price to come back here before heading to the draw liquidity. So before heading to the equal lows and the previous day low, I would not expect price to come all the way back here if we do have a new displacement right here. So a new fair value gap. AU just leaving without us. All good, no worries. USD JPY, yeah, now took out the low like we talked about. Potentially heading for this order block. USD JPY is basically, for this London session, I would say done. It's not something I'm looking at. It's not something I'm expecting an entry on right now. Not the cleanest as well. GBP cut, again, same thing. We are kind of expecting an ST here. If it does, of course, not forcing anything. If it does want to form, we'll see it, and it will likely give us an entry opportunity somewhere in New York, possibly. Bitcoin, we have this fair value gap right now. All right, that's what we talked about. Perfect. It does want to continue higher. I would love to see higher prices from here to these targets. Again, this fair value gap is not overlapping, or is it? It's overlapping with this right here. So if it does want to rotate a little bit lower, it could come into here and then potentially push higher, but it could also push higher already from here. Just expecting higher prices. That's it. Now, if I were to enter right here on Bitcoin, I would look at this entry and I would cover this breaker right here. So the low of that, and then do something like this. So let's just leave that there and look at it. I'm waiting for DAX to show me something that would be nice. 3 AM, 4 more minutes to go. All right. Hopefully we can, if it does displace a higher, hopefully we can just do a live execution on it. Not a live execution, as in not my live capital, but a tape reading execution. not financial advice. And like I said in the beginning of the day, I will not be looking to enter this live because I'm just not confident with current price action on DAX. This daily thing. All right, then it's just waiting. It would be lovely if USD cut just stinked up here and gave us some sort of entry right here. Let's just put our thing there. We put our thing there, cover these highs. It would be lovely if it just tagged us in right there. That would be pretty cool. GU heading higher. EU now exploding as well. Nice to see. Dow still heading higher. I would expect Dow to reach this rejection block with the next 3 AM spike. Might not be within 50 minutes, but again, before 3:30 AM, something like that, if it does want to continue higher, I would expect it to reach this rejection block. All right, thank you. We didn't have an entry. Yes, all right. By the way, I took nothing on demo as well. This is just me tape reading and forecasting potential entries, but I'm not doing anything on demo because I want to build healthy habits on demo. So for demo, I'm only looking at trading DAX if it is very clear and not on a day like this. So if I am trading demo, I'm only trading DAX on demo. I'm not going over random pairs to trade them on demo. That's not something I like to do because this is building unhealthy habits, and before you know, you might start to do it on a live account as well. And it's not something we want. So this is only me tape reading. I'm not actually executing anything. The 3 AM spike. What does it have in store for us today? Again, DAX, it would be very nice if DAX continues higher right here, displaces, gives a retracement, and then continues higher. Now, this is a typical, you might recognize it from equities open if you do trade it. It's a little bit, first minute is like this, and then explodes one way and does something like this. All right, it's displacing. Now, the only thing, and that's typical DAX, if it explodes like this at 3 AM, there is a good chance it's just not coming back. And it's just heading to the moon. So if we can get a retracement right here, that would be pretty cool. But again, we still have 14 minutes till this candle closes, 15 minutes till the next candle closes, and only then we will have a fair value gap to work with, etc. We do have this volume imbalance, but I would love to see a fair value gap form right here. All right, let's see how the London Open impacted other pairs as well. Nasdaq just struggling. ES, not that big of a reaction. There is a little bit more volatility. As you can see, the body of the candles goes a little bit of both ways. YM exploding higher right now. DAX we talked about, Euro GBP, not an execution pair. EU, 3M, impact EU less. That's from what I can see here. GU as well. USD cut. This is the only pair I'm currently looking at and thinking it would be so cool if it just tagged us in right here, because this is actually looking pretty clean. So if it just tagged us in right here, that would be awesome. AU, all right. USD JPY. We swept this low and now we are indeed going higher. All right, it's interesting. We didn't come into this order block. Did we come into this? No. All right. Oh, good. Again, like I said, this is not something I would be looking at to trade today. GB cut, currently not a rejection, could obviously still come, but currently not a rejection. So we could potentially head to this high, and then from there on, we study price action again, and we look at it again, potentially in New York, and then see if it does want to displace lower, gives an entry or whatever. Because it doesn't look like it's willing to go lower right now. Bitcoin. All right, respecting this fair value gap for now. If it does want to continue higher, I would expect this candle to, right now in the first 4 minutes, create a low and then push higher. This is now an order block as well. It's not the highest probability because it doesn't have a fair value gap yet, but it is an order block. What's DAX doing? Displacing higher. All right. All right, I will be quick. We'll be grabbing a drink, etc. And I will be back in a few minutes. Just going to write it down for if anyone joins. I'm back in a few minutes. All right. So DAX just right now currently fading to this place. Nasdaq going lower. Yes. Dow still pushing higher. All right, nice. Good. All right. A little bit stuck, euro. Now the thing I would want to see is this reclaimed order block hold as support potentially to continue higher. So this becomes sort of like an inversion level. All right. GU reached this first target. And if it does have the momentum, it could potentially reach up into this daily fair value gap. And from there on, we would have to look at it again, see what's happening. Hey, it tagged us in. Would you look at that? Beautiful. All right. So let's just say we took this one live and let's see if we can pull off some risk management. If it does want to run, of course, we could get taken out here and take a loss. Of course, that's something that could happen for sure. So let's just look at it, look at this and see if we can apply some risk management, etc. All right. But again, it's on the 15 minutes, so it will likely take a while. All right. USD JPY just sweeping. Okay. It's closing above the volume imbalance as well. If it closes above this volume imbalance, my next thing or my next thought would be this volume imbalance will likely act as a short-term support for price on the 15-minute to continue higher until this daily fair value gap. So if it does want to continue lower, I would want to see some rejection of this daily fair value gap right here. And then potentially continue lower again, because I do think we are heading for this weekly fair value gap right here. I don't think we are leaving behind these equal lows again. Just because there are equal lows doesn't mean we should target them immediately. So we would want to see some sort of premium, which the first one was this volume imbalance and this overlapping breaker. The next premium is this fair value gap. Potentially this, but that's a little bit high up. We would want to see a lot of momentum and price action for that to happen. So yeah, potentially maybe even in New York coming into the daily fair value gap and then seeing a New York reversal. And then maybe even this is where you can start to develop your weekly profile, maybe even Tuesday, high of the week, etc. Something like this, something along the lines of this. This is looking pretty clean actually to me. Not necessarily the lower time frame price action, but just the target and where we're coming from, this daily fair value gap. If I were to trade Forex, I would look at USD cut right now, of course, and GBP cut. Those are the two pairs I would look at. They are looking pretty clean in my opinion. Just because what makes them clean is the higher time frame. So the higher time frame analysis, as you can see, we had no problem on doing a high time frame analysis on GBP cut and no problem on doing one on USD cut as well. So that's the thing that makes them clean. It's not necessarily that the lower time frame makes them clean right here. And of course, it's a factor, but this is not the cleanest price action, I would say, because this is all liquidity as well. So it's not the cleanest, in my opinion. And on a lower time frame, but on the higher time frame, it is pretty clean. So the higher time frame essentially does all the work for us. And that's important to acknowledge. And lower time frame is just us seeking for a simple entry pattern, having some confluences on our side, and then just entering. That's it. I actually thought of something when I was just grabbing a drink. I wanted to say something, but I forgot. Maybe I'll think about it, or maybe I'll remember it. I'm not sure. Oh yeah, I wanted to tell you, if you were to look at EU or GU right now and you didn't catch entry or anything and you were staring at a chart for too long, so essentially what I'm doing, if it wasn't for this live stream, I would have 100% been at the gym right now, because already coming into the London session, I didn't like ducks, so I would have probably stayed until 3 AM, and then I would have said, all right, I'm done with it, nothing clean, etc., and then just move on. Now, if you do feel yourself right now feeling the need to trade, you will potentially even go into the 1 minute eventually, and this will probably make you force a trade or anything. And if you feel like right now London has been open for almost 1 hour and 30 minutes, so you feel like I should have already been in a trade, right? And you don't have to trade every day. This is a big misunderstanding that day trading means trading every day. This is absolutely not true. It's the furthest from the truth, actually. Once you get to a certain point when you know I should not be executing on this day, that's when you're going to be so good, because then you can have a clear line between days, between high probability days and low probability days. And these low probability days, you just want to sit out, you want to do nothing, and essentially just wait for a high probability day. Now, if you take a look at my trades, for example, I don't trade every day. And that's exactly why, and this is not to sound arrogant or to fill up my ego, but that is exactly why, since the start of the mentorship, I've taken 6 or 5 trades on DAX and I've won all of them. I haven't taken a loss as of yet on DAX. And that's mainly the reason why, because I don't trade every day. And I know my low probability conditions and my high probability conditions. And this, of course, coming into trading, you won't know from the start when your high probability conditions are and when your low probability conditions are. So don't worry about it. It will come with data, with experience, etc. So don't worry about it too much right now. Just trade, and essentially you will take losses, and you can filter out these losses potentially if they have something in common. For example, on DAX right now, if I were to take a loss today, then I could say, all right, we were very high in discount, or very high in premium, sorry, and I'm buying in premium. And this could be a low probability condition. If this also happens a lot on my other losses on DAX. So that's something to take a look at. Now, the reason that's the exact reason for me why I don't take a trade today on DAX. So filtering out these days, and it still might play out. And still, if it does want to continue higher here, it likely will. And we could be heading towards this 15 minutes fair value gap and potentially even new highs. And that is still what I'm expecting. I'm still bullish, but again, I didn't like the fact that it's coming off of this volume imbalance, and we didn't come into this 4-hour fair value gap, which I did a kind of demanded price to do. So then there's no trade for me, and that's perfectly fine. You don't need to trade every day. And filtering out these days, that's exactly how you get to a high win rate, etc. And of course, your intuition. Once your intuition and you have more experience and you're comfortable with your own strategy, with your own system, your win rate will be sky high. I can tell you that your win rate will be unbelievably high. And if someone, a beginner or someone that does grasp the ICT concepts, were to exactly copy your thing, they wouldn't have the same win rate, because your experience, your intuition, your low probability conditions, etc. They are essentially filtering that win rate. They are giving you that win rate. It's not necessarily the concepts that are giving you that win rate. It's you. It's it is you. It's your brain. It's you. It's your personality, etc. that gives you that win rate. Your experience, your intuition, all these things combined, they give you that win rate. It's not the concepts that give you the win rate. And that's the same for ICT. That's the same for everyone that's doing very great trading. Their win rate is great because of their experience, their intuition. It's not because of their concepts. And that's mainly false belief. Of course, if you're fully objective, but if you're fully objective and have a fully mechanical system, you are very limited to having a high win rate. If that is your cup of tea and you do like that, then go ahead, go for it. But fully mechanical trading is not something you want to do if you do want to have a very high win rate, because you're basically stagnating yourself. You're stuck. You're not developing. The only thing you are developing is your data. And with mechanical trading, you will not have the best potential to develop yourself. You're only looking at a simple pattern as to where we are constantly learning, mainly based off of the higher time frame, even the lower time frame as well. But we are not fully mechanical. So this allows us to grow as well and allows us to grow our intuition, etc. I think you get the point. All right, EU. And notice I'm only in the lower time frame right now because there was a potential entry. And we are now looking at a target. If there wasn't a potential entry, I wouldn't have been on the lower time frame. All right, EU, GU, just continue higher. USD cut, not displacing lower as of yet. Perfectly fine. It can still come into this mitigation block right here. So that's something to take into account. Don't go break even yet just because you saw this. Now the thing, when I would go break even right here is if we got another displacement lower and we respect that displacement lower. So for example, we displace lower here with a fair value gap. We respect that displacement lower and we have another displacement lower. This is when I would go break even, because then price has absolutely no reason to come back above to this current entry. AU, all right, just doing its thing, just ugly. Yeah, all right, we are now displacing higher. I would now expect this high to go, not to respect this. I would expect this high to go and come into this daily fair value gap. So that's my next target. My next target for GBP cut would be this high. For potential entry, I'm not sure. I'm not sure. We did come into this break here. We respected this ST. We could come into a fair value gap, come into this volume imbalance again, and then maybe continue higher until the daily fair value gap has been reached. Once the daily fair value gap has been reached, I'm not looking for another long entry. I would want to wait and reestablish and think about it again, potentially in New York, like I've said, and then maybe look for shorts even, or continuation of longs. Who knows? I can't predict the future. All right, yeah, so yeah, this. And if I were to enter here on a fair value gap like this, for example, my stop would be huge because I want to cover the break right here. So this, obviously, this 0.64 RR is just not worth it for me. It's not worth the risk. So yeah, Bitcoin, all right, hoping that it displaces right here. Not hoping, but I think it will displace right here. That's ideally what price should be doing, displacing away right here, respecting this fair value gap with a new displacement leg higher. Yes, now retracing. I wouldn't too worry about this retracement too much. As you can see on the 15-minute, it's still a healthy retracement. So it can still come into this breaker or this volume imbalance like it's doing right now, and then continue higher. So that retracement wouldn't worry too much. Oh, so beautiful consolidation. The textbook consolidation. On the one hand, not so much. All right. And Q. The Dow, still a healthy retracement in my opinion. Nothing much to worry about as of yet. I would still expect higher price. We are coming into this order block. Yeah, not too worried right now. I would still expect higher prices. This is likely on this Dow entry. This is something where I would likely be break even. Again, my break even is not 100% mechanical, like I said. It's a bit of subjective as well, so it's using my own logic, my own experience. But this is something I would go break even on right now. Let me write it down as well. Just because right here, price is displaced away from this entry, from this breaker essentially. We do have this long wick, there's no clear displacement, but it is already pretty high to the target. And if it were to come down, I wouldn't see a reason for us to come back up again. We've mitigated pretty much all fair value gaps right here. I don't see a reason for price to come down. That's basically it. I just don't see a reason. We could reach into this order block, but then I would want to see the body get respected and displace higher from there. So it doesn't have, again, then it doesn't have a reason to come back all the way down here. So yeah, I would be break even on this if I was in an entry. We looked at this. Yes. USD cut again, nothing changed. AU, GBP cuts. All right. And DAX still ugly. All right. Interesting to see EU as well in a target loss. So let's focus on the Dow, the risk management we are doing on the Dow right now. If we got an entry, of course, this entry was pure hindsight. So let's just focus on the risk management in real time. ES, if it does want to continue higher, right here for ES, I wouldn't go break even. That's a different story because I can still see a reason for price to come back down here and then continue higher. Oh. So I wouldn't go break even on this. DAX, there wouldn't have been an entry for me even. It's just, and like I said, like I demanded of price that we closed above highs, and we closed above this high, yeah, but we didn't close above this high. And it's just not something I like, just absolutely not. We do have this volume imbalance, so let's hypothetically say if we were to enter, then I would enter on this volume imbalance right here. Would that be an entry of me? Personally, absolutely not. A very forced entry. There are way better days to trade. EU. Geo currently respecting this fair value gap. Respecting is a big word, but it's rejecting a little bit, a small little bit. USD cut, this might take a while as well. I think USD cut is mainly a New York pair as well. So if it doesn't displace in London right now, then London or New York might do something like this and then continue lower. Of course, expecting that we are going lower. If it does displace currently in London, London lunch or anything, then New York would be a retracement of London and a continuation lower. If London, this expansion lower, leaves behind a fair value gap. If it doesn't, then we can still expect New York to take out the high and then continue lower. So this will be interesting to see, and I'll keep everyone updated on that. AU, just this. Nothing really much. Nothing really much as well. This is a pair I would normally, like I said before as well, I would either wait for it to come into another discount to look for a trade potentially. But right here, this is a trade, or this is a pair I would not look at the lower time frame. I would look at the higher time frame only currently, and then look at it coming into a discount array and then going into the lower time frame. GBP cut heading to the highs, heading to that daily fair value gap right here. It's what I believe. And then potentially dropping off, maybe even going higher today until this high, who knows? Not trying to predict, just trying to trade what we see. But what I can see currently is that we are heading towards this high. That's pretty much, for me, almost a certainty. If it doesn't do that, then I would avoid it, probably in New York as well. I would avoid it because then it's not accurate in my opinion. Then it's just a little bit consolidating, because if it rejects right here, then the rejection is perfectly fine. That's still healthy, but I would want to see something like this. If it comes lower and just does something like this, takes out highs and lows, then obviously seek and destroy, and that's not something we want to be involved in. Bitcoin is finally displacing right now. All right. Let's see if we can apply some risk management here as well. Okay. Currently, this wouldn't be a trade for me where I would be break even. This is just give price some room to breathe. Same with what we do with our stop loss, we are giving price some room to breathe. So the same thing we want to do with our stop loss currently. If we do move it to break even, we want price to have enough room to breathe to actually reach our target. We need to give price the potential to reach our target and let it play out and have a little bit of confidence. Of course, that's tough sometimes, especially when you do notice your psychology is not at the greatest point currently, but that's something to work on then and acknowledge, and have a pen and paper next to you and write down things when you do notice. So for example, right here, this, when it retraces right here, this might be you getting anxious or getting some sort of fear that it's retracing, and you're thinking, oh shit, it's retracing, what should I do? And this is something to note down your psychology and write down, I'm getting anxious while price is retracing right now. I need to watch my next steps consciously, because next step for me would be that over risk management. I would suffocate the trade. I would start to play with my stop loss, and I would do this. I would start, oh, it shouldn't reach above there. I'm just micromanaging a trade, and that's not something we want to do. We want to let it play out, let it breathe, and just see what happens. And if we take a loss, we might actually take a loss here. Who knows? I've accepted the loss already. Well, when I put the position tool right here, I accepted the loss. I thought, all right, we might lose, but is it worth the risk? Yeah, for sure. I would take it 9 times out of 10, for sure. So yeah, actually maybe 10 times out of 10. So yeah, just I've already accepted the loss. So basically I've already thrown the money away on this trade. If I was to enter live, I would have accepted, all right, I've already taken a loss here. I don't really care. I've done my job now. And now it's letting the probabilities play out. Now it's letting price do its thing. And if the probabilities are in my favor, which they are, but obviously this could be that 10% or 20% that loses, we just don't know. Then if the probabilities are in my favor right now, then it will play out and we will make some profit. And we will basically 2.3. So we would basically make up for 2 losses. And that's also a confidence booster. If you were to target previous day low, you would make up for almost 4 losses. And that's a major confidence booster, of course, because if you're making up for 2 losses, then the next 2 trades, it's of course very important that you don't get too overconfident. But the next 2 trades, you do have a little bit more confidence that you think, all right, I already made this money. I can now risk, of course, the same amount, but I can risk it more confidently. I don't really care if I lose this because I already made the money. And building this buffer is important because I also know, and I've also noticed for myself, I always lose the first trade of an account. That's just me. I'm not sure why. And well, I do have an indication. It's that anxious feeling of that first trade. You need to get over that step. I also had this with challenges as well. That first trade, I just need to place that first trade. I just need to get it over with. Most of the times it's a loss. So I just need to take that loss on the chin and then build my confidence again, slowly back up, etc. So yeah, that first trade for me of a brand new account, whether it's a challenge or anything, that first trade for me, that's the most difficult trade. And most of the times it's a loss for me. All right, so yeah, basically don't get stressed out right here. This is a healthy retracement still. This is still waiting for a new displacement. Of course, if it wants to continue higher, it will take us out. No worries, perfect. We did our job and we are going to continue keep doing it. So that's no worries. AU, nothing clean. All right, now it's having a retracement. Now I would want to see price continue higher from somewhere like here. Either this fair value gap, either this fair value gap, and then a continuation higher to this daily fair value gap. Again, this wouldn't be an entry of mine. It wouldn't, personally, it wouldn't have been an entry because we are not coming off of a daily or 4-hour discount array, not even coming off of a weekly, not even coming off of a monthly. So this wouldn't have been an entry of mine. And especially not here. Like I said, I would want to enter somewhere around here, and entering here feels like I'm chasing price a little bit. I don't like to do that. Bitcoin, all right, slowly moving higher, taking its time. It's also a characteristic of Bitcoin. When it moves very fast, but the consolidations are a pain in the ass. It consolidates a lot. Especially as of late on the weekends, there hasn't been really clean price action, which is a bit unfortunate. So I've been trading Bitcoin less, but I still have my targets. Still know what I'm looking for. ES. All right, ES coming down low. Let's just say this tagged us in as well. Just for the example's sake, let's just say this tagged us in. Let's apply some risk management if it does want to continue higher. Again, London in ES is not something you want to trade. It used to be nice actually trading London in ES. I think when was it? Like October last year or something. September in the summer months, it was all right to trade London in ES, but as of now, I just don't like it. NQ, yeah, didn't get an entry there. Dow, all right, let's see if it does want to continue higher or tap us out at break even. Perfect, we've managed our risk, no worries. We had price ran 2R, so that's nice, 2R. And again, if it's at 2R, not necessarily fixed RR for my break even, but it has enough room to go higher and not suffocate the trade. So this break even is fully understandable in my opinion. DAX, all right, DAX is going lower right now. Exactly why I didn't want to trade as well, so I'm glad I stayed out. Now the next thing for me, what a lot of people will do, of course understandably, if you were so focused on a buy right here, you would likely now start looking at sells immediately. You would likely think, all right, I want to look at sells right now because we have this huge displacement downwards. I want to obviously look at some sells. And that's not something you want to do, especially not, we're not coming off of a clean premium array. That sell would be very forced. And currently order flow is not even aligned. Just because we have this move down doesn't mean we have bearish order flow, etc. Just notice that pattern as well in yourself. If you do feel like, oh, I should now look for sells, no, just go over the high time frame analysis first again, and then start over again, basically. So yeah, DAX for me is basically done right now. Not trying to predict anything on the lower time frame because we don't have anything clear on the higher time frame. I will not be going into the lower time frame. We could potentially see it come into this 4-hour fair value gap finally, and that's unfortunate that didn't happen in London like I hoped for or like I demanded price. But of course that's fine that it didn't happen. We just react accordingly, which is doing nothing, basically. All right, perfect. Euro GBP, not something we trade. EU, just continuing higher for now. Coming into this fair value gap, so if it does want to continue lower GU, then it would need to disrespect this fair value gap first. And again, if it does want to continue higher, it will likely respect this fair value gap. So as easy as that, right? USD cut. Can we now finally get a displacement away? That would be awesome. Yeah, it would be pretty cool if we get a displacement away, and then we can apply some risk management as well. There is some momentum right now. What is actually, let me take a look if we do have some news coming up later today. The first thing that opens when I open my browser is Forex Factory, the calendar. That's because then I never forget about it. I always see the calendar, so I never forget about it. All right, nothing much. Euro, yeah, nothing much. Nothing to worry about as well, like we already established ahead of the week. But all right, perfect. So at 5 a.m. there's a little bit of Euro news, but it's not that bad. What's up, Joseph? How are you doing? AU just starting right here. ES. Yeah, I would want to see some sort of displacement away right here if it does want to continue higher. On the 5 or on the 50-minute, this is actually the breaker, but we were looking at it on the 5-minute because this was a 4-hour fair value gap. And again, just because we have this move lower doesn't mean order flow is now bearish. It would need to respect the premium array, need to start disrespecting discount arrays, etc. This is also clean, again, not necessary, but it is a market maker buy model because we have this consolidation. On the one hand, it's probably clean. This consolidation is move away into discount, and potentially from here we can get a switch, etc., and a move higher. But again, you can see already how my model is so simple, and I don't even look at the market make model of power of 3, etc. It's just, if it happens, it's nice, and it will already happen whether I pay attention to it or not. It doesn't matter. It's not relevant to me. For example, here we had a power of 3, we had a move down at midnight open, but it's not relevant to me. I just don't care, because this 4-hour fair value gap right here, and this is a displacement away, that's all I'm looking for. So whether that happens at midnight open, that doesn't matter. Like, for example, here, it already happened. Like, it's very hard for me to explain, but it already happened, and it will be guaranteed to happen if there's an entry either way. So it doesn't matter. A market maker model will be guaranteed to happen if there's an entry either way. So it doesn't matter if you mark it up or don't. The same goes for power of 3. This will be guaranteed to happen either way. Just, it doesn't matter if you mark it up or, and that just wasting those brain points like we talked about. All right. Thank you. Dow again, we are break even. On the 5-minute, you can see as well, it has no reason to come back down here, in my opinion. In my opinion, I would happily take that break even right there. I would want to see price respect an order block here, respect a gap here, and then continue higher. DAX, again, nothing. Nothing on DAX today. Let me go back to the 15 minutes. Euro. All right, we are closing inside of this fair value gap. That's interesting and something to take into account. Something to take into a look at. If you were in a trade from down here, for example, then this would be the moment I would close it completely. If you obviously had enough RR. So if you were at 2 RR, for example, or anything, then this moment right here would be where I closed the trade completely. If you do, if you were still waiting on something, just out of precautions, just precautionary measures, I think. I'm not an English expert, but yeah, just to be sure, just to be certain, and to take some profits as well, because if you wrote this up from all the way down here, then you're in pretty good profit already, I would reckon, unless your stop loss is huge. But yeah, USD cut. All right, can we get in displacement again? Just the moment as I say that, we get some sort of displacement. A very small fair value gap, but we still have 11 minutes left on this candle, so who knows. Out USD. USD JPY coming into this 4-hour fair value gap now, order block. Now then it gets interesting potentially. Then we could start to take a look at it again. GBP cut. All right, same thing. I would want to see this volume imbalance right here now hold as support and push price higher until the daily fair value gap. Of course, this is very this is me. This is exactly what I want to avoid. This is me making a story on the lower time frame, and that's not what should happen. What should happen is me reading the daily and 4-hour and just seeing this fair value gap and waiting for either an ST in this volume imbalance, waiting for an ST in this fair value gap to the downside, and then start looking at the lower time frame. Now I'm making a story on the lower time frame, And that's not something you want to do, essentially. Now, if you do get an ST here, then that would still be my entry model with the volume imbalance, but we did disrespect the volume imbalance on the 50-minute, and that's not something I would like to see. So that's why I would expect higher prices. But yeah. All right, we are now displacing away on ES. Let's see if we can apply some risk management here as well. And Q, Dow, yeah, again, Dow is just, for me, it's just, yeah, it has no reason to come back down here. This break even is fully justified in my opinion. DAX, again, this could just be a sweep of the lows and then a continuation higher. Who knows? Who knows at this point? I don't think even DAX knows what it's doing right now. But yeah, this is nothing clear. There's nothing even clear on the higher time frame. So going into the lower time frame is just a one-way ticket to confuse yourself. And if you do act on the lower time frame without knowing the higher time frame, you will probably lose some money, which is what we don't want, of course. And that's why we have the checklist, right? We have the psychology first. Psychology is checked off, basically. A higher time frame analyst. Some of the pairs were checked off. For example, DAX really wasn't checked off, so that's why the low probability conditions, that's what held me back. So high time analyst, sort of checked off 3 execution, and that's the only thing, last thing you need. All right. Euro GBP. I think I'll end it in a few minutes. The Zoom, I think we had a great Zoom. I'll potentially start one in New York again just to go over the pairs. I think that will be beneficial. All right, now displacing higher, so still displacing higher from this fair value gap. Perfect. Still likely heading towards this high. USD cut. All right, if we can get some displacement, I would love to take a look at USD cut in New York and see how it's acting and see if we can potentially even get a re-entry in New York and potentially see how our risk management is evolving, etc. AU, all right, doing its thing. USD JPY doing its thing, potentially going into this 4-hour order block, and see how a lot of people would also take this 15-minute fair value gap. That's all right, but it's irrelevant because we're already looking at this 4-hour fair value gap. So whatever here, lower time frame stuff on the left is here, that's irrelevant. Of course, it might boost your confidence. It might look cool as well to have this fair value gap here and to know exactly it's going higher, but it's all based on the higher time frame. GB cut, yeah, perfect. Running to the high, that's what we're expecting. All right, I'm going to close the Zoom. I'm going to be back in New York. I'll give you my word. Yes, I'm going to be back in New York. Yes, for sure. And then we'll update it again. So, and potentially look at some new entries, etc. So thank you for being here. I loved this. I think doing this more often will absolutely be great. So thank you, and I'll see you later. Bye-bye.